G'day, mate. This is Market Michael here, coming at you with another video. Alright, well, interestingly enough, let's cover some economic data in the US here. So, what do we got going on? I will do this so you can watch the futures while I read the data. So, here we go. Now, okay. So this initial claims we got was positive. It was more than initial claims here. We got a big increase. Well, decrease. That means there's less people applying. So this is the fourth consecutive month here, and layoffs fell 24,000 to a seasonally adjusted 209,000. And that's how many people are looking at it. But they do say, well, the 4-week moving average reduces volatility in data, and but the method for estimating claims is imprecise, and figures are often adjusted as more data come in. And the Labor Department economist said he knew of no factors that may have obscured the latest estimate. So, I think that these numbers are coming out too good to be true. And it's really, I don't know. If that's true, we are decreasing. That is pretty positive. So let's see, what are we getting here? Well, we did a beat for durable orders, but it's still decreasing. Orders for durable goods intended to last at least 3 years, such as stoves, industrial robots, increased seasonally adjusted by 2.6%. We expected a 1.9, 1.8%. Within this category, non-defense aircraft parts rose 44.5%, suggesting the first quarter of aircraft orders at Boeing helped drive the headline figure. While when excluding transportation, durable goods orders were virtually unchanged in March from the previous month. But the transportation was no gain whatsoever, so that was a fail. The business investment gauge new orders for non-defense, excluding aircraft, declined 0.1% in March from the previous month. This allows a robust month of capital spending growth in February. March business investment decline came on the heels of tax overhaul that aimed to rev up investment by firms. Many economists expect overall U.S. economic output will grow at a faster rate this year, bolstered by the recent tax law changes. Investment increased robustly in 2017, but has fallen in the 2 of the past 3 months. For the first quarter overall, the gauge rose 6.5 compared to the same period last year. Thursday's report showed a 1.7 decline in machinery orders in the past month, the largest monthly drop in April 16. Meanwhile, orders for communications equipment rose 8.2%, the largest gain since the beginning. Machinery orders is decreasing is a bad sign. I mean, how did we did get a decline in those bond yields. Okay. Well, because the ECB wants to end the stimulus program by 2019, but there's a slowdown in the Eurozone that led investors to dial back expectations for 2019. A careful dovish Mario Draghi. Expectations for higher interest rates and pickup in inflation toward the Fed's 2% annual target has helped underpin Treasury trading. What else do we have? What other data? So, you know, transportation. So it said this transportation was airlines are. Let's go back to that. Orders rose 8.7% in the first quarter of 2018 compared to last year. I'm trying to find the part when it talks about, yeah, transportation equipment, which clocked in gains 4 out of the 5 past months, drove March durable goods increase. Within this category, non-defense aircraft parts orders rose 44%. So basically, they're saying that this gain is just from the airport gains. Okay, so demand for long-lasting U.S. factory goods rose in March due to increased aircraft orders, but underlying proxy for business investment fell. So you get a good number, a beat, but those airplane numbers driving this market down, driving this economy back to zero. What else we got? So this initial claims, yeah, we went over. So all right, we're getting better trade in international trade in goods, and we're looking at wholesale inventories starting to shrink a little bit. Interesting, very interesting. So, overall, again, they're going to try and spin this. They say, "Oh, you know, this is good, this is great," but really it was led by the aircraft gains. So, let's go ahead get to some market futures now. We've just been absolutely ripping through here. Looks like we're trying to break that upper trend line, but it's going to be a little hard now. If we look at we were looking at a 5-minute before, now we're looking at a 10-minute. So we have this saw-like action that's going to keep ripping higher, keep bouncing off the top of this trend line. We did test that bottom trend line twice. Again, I think we're still going to have to wait and see right until the open to see what happens. Um, you know, if we do bounce above, we're going to hit overbought. That is pretty bullish if we do make a new high here, which it is possible, if not likely. And if that's the case, then we are en route to have futures spike off and create an environment where stocks are going to rise major league. Right now we see uh, Amazon getting second wind here and attempting to go on another run. We have Facebook here. Looks like we're getting transition candles to move higher. And that 10-year is decreasing heavily because the ECB is still selling bonds. We got a lot going on. Gold is holding on for dear life. This is going to be an interesting day. very, very, very interesting. Because we at this point we've got support on this upper trend line, and it's looking like we will run up higher. So this is possibly changing the attitude of that potential of that bearish action, as we're almost positive on this MACD. So, you know, I was expecting these futures to remain flat, but we are pushing up more than what I had foreseen. I knew that having this run up was a possibility, but will it last is the question, and will markets how will markets handle this into the open? I think most people at this point would put their bets in to say that markets are going to go higher, based on, you know, based on the ECB's information that, they're not dovish, they are, but they're not as dovish as they could be, in that they're still looking to raise. And some of the data on the face value is was up, so that indicates that it is a positive move for the markets. But overall, you know, I would say that this run here would have to increase so substantially that you know that we're spiking up. We'd have to have humongous 100-point gain, right? Right at the open. Change the tide here. Go right into this super bright green mark. You see, we're red now, but we would go right into this bright green, pop above this, continue to smooth out above the tricks line. Right now, we're not even above that 0% MACD line. All the indicators are pointing up, RSI, CCI, but, you know, I'm just still sticking. I want to be proven wrong. That's where I'm coming from. I want the markets to tell me, okay, that this is you know we don't want to be we don't want to pull back here. We want to increase. And as of now, these futures are telling me that. They're telling me that, guys. But will that happen? Are we gonna get you know some action? Uh, you know, Facebook has resistance at 178, 180. I don't think that's going to do much. You know, a 4 hour shows Amazon's ready for this breakout. An hour chart shows it's looking for a pop, and a 5 minute shows it's dead. A 10 minute shows it's dead as well. So we're gonna just have to wait and see at the action of the markets, because we're pretty much mixed here. We're still negative on daily charts, and you know and the futures isn't the indices. So we're gonna have to see what this does. And the information with that labor market tells us that if the Fed is going to continue with a hawkish policy of increasing rates, that's going to negatively impact the economy even more, um, drying up that liquidity. Now, they're also, um, Yeah, yeah, drying up that liquidity, guys. Hmm. So this is pretty remarkable here. Like, let's look at this 30-minute. This 30-minute shows that we are almost peaked out. So perhaps we do get a slight spike. Will that continue? This is the trend here. We just popped up on this 30-minute. Is this gonna continue? Our chart, I mean, a 10-minute, we're kind of extended on this bull run, and our chart shows that we are at the tailwind of a move here. So again, we're just gonna have to wait and see what the real direction is, where stocks want to go. So far, the economic data came out mixed because we did have declines in durable goods, and the airplane uh, airplane manufacturing parts was responsible for that higher than expected number for that durable goods. Those wholesale inventories are getting depleted, so that means that they are able to sell those goods. Again, I'm gonna leave you guys here. I hope you'd enjoy this late edition of the pre-market morning show. I will see you around 10 o'clock for some market direction. Now, most likely, I'm gonna just say that we're probably gonna go higher, but I'm still negative here in the short term. I don't think the markets we're opening up at resistance, so that's gonna be a tough time for markets, and people are gonna want to sell into this Facebook rally. I'm not really sure if what the traders, what the algos want to do, whether it's profit mode or whether you know. Let's look at a weekly chart, and again, this doji here indicates as of now that we're transitioning into a bearish phase, which I've been calling out this bearish phase for a while. So we should, if this bearish phase comes true, we should get at least another week of bad selling and then reverse. But as of now, guys, we're up. Futures are up, and they're relentless right now, guys. Relentless. Markets are not able to drop. So this is very bullish in the long term. In the short term, but that short term will turn into long term. So it's 9 o'clock. Thank you very much. I'll see you guys later. Please like and subscribe. 10 o'clock is probably when I'll come on. 10:30 is nat gas inventory, so maybe I'll get a video out 9:30 or so. Thank you very much. Take care.